Hey, good morning. Welcome to the morning brief. Today is Friday, August 7th. Why are you watching this video? I'll tell you why, because we're going to cover news. We're going to cover chart patterns. We're going to cover inventory. We're going to cover long-term expectations from the Stock Traders Almanac. All of that in about 3 to 4 minutes. So there you go. What's going on forexfactory.com calendar? So we had 8:30, we had non-farm employment change, which came out negative. I see this as a huge miss of negative 23K versus positive 85. So not a good number. However, the market likes that number for a couple of really kind of weird reasons. The first reason is that if unemployment or employment change is not as good as expected, that means the economy is not as good as we thought, and that means the Fed probably will not raise interest rates. And that's what the market's focusing is on, the Fed action, not necessarily on the number itself. U.S. employment rate was 4.1, so it actually went down from 4.2. That's a good number. At 10 a.m., we have FOMC member Barkin speaking, and at 3 p.m., consumer credit month over month. Taking a look at charts. We had 2 down days, and now we are gapping up. This is from the employment number being way worse than expected, which makes people believe that the interest rates are not going to go up, and the market likes that. It's kind of a weird thing. It sort of doesn't make sense, but that's sometimes the way the market thinks. We are still above all the moving averages. So we're definitely in a uptrend. Long-term, medium-term, I would also say we're in an uptrend. Short-term, we're also in an uptrend. So volume yesterday was below average. This is the one theme that continues to be every time we have a major deal, it's on lower volume or declining volume. And this is just showing me that there is no real support for prices up here. We need volume to be at least above average in order to continue to go up, which gives you the, yeah, it could happen. It could not happen. It could keep going to the moon. Sure. I think caution is the key word today. Obviously, Fridays are the worst trading day for most traders because you give up a lot of your profit from the week on Friday. Be careful. Caution is the word of the day. Where could we go? We could definitely go up and test all-time highs. Absolutely. 7,800, 7,820. On the downside, I think we could come back and test this old high over here at 76.97, we'll call that. Yeah, so that's what we've got going on there. Inventory. So yesterday we had a slightly lower price action and inventory followed. So those are correlated, means the market is correctly acting like it should. Here is the overnight action. Well, there's the 8:30 number, boom, bumping up. We have 51 points. So much for those last couple of days where we had it in the 20s. Now we're back into the new normal, which is 50 to 70 overnight action. So volatility is back again. Where do we have support and resistance? Resistance on the top side, 77.85, 77.90, 7,800, the whole number, 78.14-ish. Where do we have support? We got support around the overnight low and yesterday's low, around 77.25. 77.10-ish, 7,700, of course, the whole number. We get below that, it kind of starts getting yucky. 76.90, 76.76. So there's your support and resistance levels. Stock Traders Almanac for today is negative 47.6% chance the market will be up, 47.6, which gives us approximately a 52.4% chance the market will be down today. That is from the Stock Traders Almanac. Buy one, look it up. Great little book on market statistics. Hope you have a great day. Happy trading. Remember to subscribe and like. I will see you Monday. Have a great weekend. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.